What if I told you that while most investors are getting all caught up in all the hype around Palantir, there's something that many everyday people miss, and it might just cost them big in the long run? Let me explain. If you're the kind of person who sits there and laughs about Palantir, somebody on Twitter today said, keep buying Adobe. So I wrote back, okay, let me ask this question. You're telling me that because Adobe is down. Then according to your logic, when Palantir went from $45 a share down to $5, you should not have bought it. How would that logic have worked for you? Guys, I don't think Palantir is worth $5 a share. It's worth far more than that. But I also don't believe Palantir is worth $170 a share. And guys, the crazy part is, in a few minutes, I'm going to show you the numbers of what Palantir has to do just to justify today's price for the next 10 years. Not even growing. But if you think it's a value play, and let's say you want it to grow 15% a year for the next 10 years, I'm also going to show you how much they have to increase their cash flow by every year for the next 10 years to get a 15% return on their money based on today's value. If what I've said intrigued you, and you sit there and go, okay, well, maybe there is more to investing than just the stock price, we're going to speak the same language. I don't need you to be an expert, but I need you to at least be open to the fact that when you buy a stock, you're buying a piece of a business. And if you pay a reasonable price today and the business grows tenfold over the next X number of years, the stock will likely follow and you'll probably go up tenfold as well. If that makes sense to you, there's hope for you. If that makes sense to you, you're more of an investor than a speculator. If that doesn't make sense to you and all you care about is the stock going up and the story, nothing's going to save you but a deep, deep loss in the market. But good news for you is it will happen. Let's go check out Palantir and the bull cases. Now, guys, when I say the stock is overpriced, I'm not saying the business is bad. A great company can be massively overpriced and a bad company can be underpriced. Look at GameStop. GameStop is a bad business. It's not going to work. But guess what? Michael Burry, one of the deepest value investors of all time, made a killing on GameStop before even the meme guys got a hold of it. Guys, Palantir, they've become basically the operating system for software infrastructure across all major AI infrastructure. Any company can simply plug in to Palantir Foundry to control their data, they can train their models and deploy applications. Just like businesses are built in the back of Microsoft, this will be Palantir for AI services. What's a better story than that? Incredible story. Guys, they're a major partner for tons of governments and defense contractors around the world. They've become the digital backbone for all government defense systems. In this scenario, Palantir is essentially integrating satellite feeds, supply chain data for deliveries and drop-offs, and real-time battlefield data into live intelligence packages. They have this platform called Gotham. It's already used at the Pentagon and at police departments. The business is expanding internationally and does work with NATO allies across the board. There are also huge advantages from their ecosystem that the business has. It integrates directly with all major government contractors, making it hard and costly to switch to competitors. Guys, that is a great business. It's a phenomenal business, and I'm not done yet. They're going to totally change how every industry operates, even in blue-collar work. This reach will act as the AI operating system for industries from healthcare to transportation. Doctors have instant access to unified patient data. AI models will analyze symptoms and genomes to recommend personalized treatments, and administrators will use Palantir to forecast and optimize everything from staffing to ICU bed allocation. This future builds on the seeds that are being planted today. The idea being that time savings across all industry, the tedious work that blue-collar, everyday workers have, will be optimized. It'll make all this work more efficient. Can anybody tell me what is bad in that story? Nothing. And they're the leaders of it. They're absolutely the leaders of it. So if you walk away from this video thinking that I don't think Palantir is a good company, you haven't listened. However, a great story at the wrong price is a bad investment. So the question becomes, what's the right price for Palantir? Guys, the story gets better. Here is their results, their last quarter's results. U.S. revenue grew 68% year over year, 17% quarter over quarter. U.S. commercial revenue grew 93%. U.S. government revenue grew 53%. All revenue grew 48% year over year. They closed 157 deals of at least 1 million. Guys, keep in mind, a few years ago, they were doing only big deals. And they said, you know what? We need to grow. Let's do smaller deals. They've absolutely dominated that. 157 deals of $1 million, 66 deals of at least $5 million, and 42 deals of at least $10 million. Guys, their record-setting $2.27 billion of total contract value closed, up 140% year over year. Have we even seen a number that's less than 30%? Oh, right here. Oh, 20 operating margin. That's it. My God, this company absolutely killed it. They now have cash and cash equivalents of $6 billion. I repeat, this is a great business, and great businesses deserve a premium, but at what cost? If you think it doesn't matter, then why not pay $5,000 a share for this business? Why not pay $10,000 a share for this business? Why not $20,000 a share for this business? Guys, if me saying that to you makes you go, yeah, why not? I don't know what I can do to help you. The only way to really be able to learn the lesson from that is to lose a lot of money. Because you might make a lot of money on Palantir, but eventually you'll lose a lot of money on some other investments. Look at their total revenues, quarter by quarter. Guys, this isn't year to year. This is literally quarter to quarter. 678 million, second quarter last year. 726, 828, 884, $1 billion. This is either one of the best companies ever or the biggest scam ever. But I will tell you, very rarely do scams. Somebody recently said, hey, is this the Enron of nowadays? And I said, listen, the only thing with Enron was they reported free cash flow significantly lower than their net income. Let me show you the difference with Palantir. Palantir is quite different. Their free cash flow is significantly higher than their net income. That's not very consistent with fraud. Now, have I had questions in the past about the way they beat on earnings by a penny or matched just exactly as they needed to? Yes. But the entire company being a fraud is probably not very likely when you report free cash flow of $1.3 billion versus net income of $570. That's not an indicator of fraud. Guys, and our community members have this as a sell. 55% of the people who voted said strong sell, 40% said a hold, only 5% said strong buy. Are they value-driven people? Sure. Now, guys, here's what's crazy. There are people out there who think Palantir is a value buy. Guys, the average software business sells for between 8 and 12 times sales. Palantir is a $436 billion company selling for 140 times sales. Now, can Palantir grow its business a lot more than Microsoft and Oracle and other software businesses? Absolutely. Adobe? Absolutely. But what price is too high? That's the only question I'm asking. If we can agree that at some point there's a price that's too high to pay, then we can have a conversation. But the problem is the way we behave is I just got a reaction to my 24/7 video yesterday where somebody said Microsoft, Meta, and Palantir are the only companies to buy in this market. You know what that's code for saying? There is no price too high. There is no different way of saying that there's no price too high. And it might work out as stocks keep going up. But what happens when stocks go down? I've seen this happen many, many times over the last 25 years. We warned about it with EVs. We warned about it with cannabis. We warned about it with real estate in the late 2000s. Not on this channel, but I remember people telling me, Paul, you think buying a piece of real estate, it's like buying a certificate of deposit. I'm like, okay. No, what I view it as is when you buy any investment, your return is going to be the present value of all the future cash flow you receive. Let's see what analysts think about where this company is going. You know what's funny, guys? Not as much as I would have thought. Basically 60 cents a share in profit this year, growing to $2 over the next 4 years. I would have thought much greater than this. I would have thought much, much greater than this. Revenue growth, huge. $4 billion this year, going to 12.7. That's why I'm shocked about they're tripling their revenue and profits only going up by a little over 3 times. Something's not connecting there for me. I don't know why that is. So guys, the question becomes, what is the right price to pay for Palantir? Let's assume today's price is reasonable. Let's assume that the price right now of $170 a share, or the market cap, which is essentially the full price of the business of $436 billion is the right price. Now, let me ask you a question. What's a reasonable multiple to pay for Palantir? 10 years down the road after it's grown a ton. 15? No, it's better than that. 15 is the market average. What's the right multiple of earnings and free cash flow? 15 is too low. 30 is probably too high. That's more for like a moat business like Coca-Cola. But I think 20 to 25 seems about right if the story continues. So I'm gonna go on the high side and say 25 times free cash flow. Okay, so let's say the business is currently worth $436 billion. Let's make it even and call it $450 billion. Divide that by 25. This tells you how much earnings and free cash flow it needs to make to justify that price. 450 divided by 25 is 18. $18 billion in free cash flow. Okay, well, what did they do in the last 12 months? Well, guys, I showed it to you. They made $1.3 billion. So they need to increase their free cash flow by about 14x. 14 times today. Okay, so in 10 years, they need to increase their free cash flow by 14x. What is that math? Well, guys, I'm going to do it very simply for you. That is a growth rate of 30.2% per year. Okay, that's possible, but wait. That's to justify today's price, today's market cap, today's $170 a share. So if you agree with that, that means just to break even, to have it worth what you're paying today, they need to grow at 30% a year. Now, if you think Palantir is a value play that's worth 15% a year in growth, let's do it from there. So 15% per year for 10 years means instead of $18 billion, it needs $73 billion in cash flow. It did 1.3 today. It needs to grow at 49.6% per year for the next 10 years. Guys, I want you to do an exercise. I want you to Google and see what $500 billion companies were able to grow their free cash flow by 50% a year for the next 10 years. Hell, find me not revenue, by the way, not revenue, cash flow. That's bottom line at the end of the day after paying all overhead, all taxes, all costs of goods sold, all in everything. It needs to grow that by 50% per year. Guys, if you believe that's probable, you gotta buy Palantir. If you believe that is likely to happen, buy Palantir. If you didn't understand that beforehand, and this is a wake-up call for you, welcome to our channel. If you just believed it was just about this company's going to keep going higher because it has, but now they get a little more sense to you, I commend you. If you still think I'm a wackadoo, I need you to do me a favor. I need you to block me. Block this channel. I don't want to see you. I don't want to hear you. You are beyond saving. I'm sorry to say that, but that logic just makes no sense. It could very well happen. But if you made 100 investments banking on this outcome, you are going to lose a lot of money because 15% a year is not going to make up for the potential down of this company. Guys, 140 times sales. 140. The person who said that Microsoft was a good value, Microsoft's selling for 14 times sales, 1/10 the amount. And Microsoft generated $72 billion in free cash flow. That same person said Meta was a good buy. Guess what, guys? 11 times sales. 11. Let's look at Oracle, another major software business. Oracle, 12.7 times sales. This is starting to sound a lot like that Tesla conversation. Tesla's not a car company. That's why it sells for 11 times sales. It's a software business. It's absolutely asinine. Guys, I'm sorry. I sat there and said when Palantir was 45, it was ridiculous. It fell to 583. I didn't buy because I said my price was $5. And in full disclosure, if it had fallen below $5, I might not even bought because Alex Karp absolutely bothers me. I think he's shady. Something about him just irks me. When they just beat and they put assets on their books to beat by a penny conveniently from quarter to quarter, that bothers me. Another thing, guys, is Alex Karp and everybody on the Palantir team is selling the stock. Not a single person has bought a share in the last 1 year. What they're saying is, if that's the smart money is selling. They're not even buying. And guess what? Alex Karp isn't some guy who's like Bill Gates and Warren Buffett who's late in his years and just trying to give it away. Alex Karp is still too busy talking about those cocaine addicts, short sellers, and all that stuff. Guys, I have no skin in the game. I don't own Palantir. I'm not short Palantir. I have no skin in the game. All I have is logic. If this doesn't speak to you, I don't know what to say. If it does speak to you, welcome. I open my arms to you and say, we can disagree on a lot of things. And I'm sure there's people in the community who disagree with me on growth levels for Palantir. But there's a difference. They all realize the most important tenet of our principle-driven investing. A great story can become a bad investment if you pay the wrong price. And if you want to learn more about those tenants, do me a favor, click below. I'll send you a PDF. We talk about all these tenants sent right to you, and it'll be absolutely free. And if you want to join our community, this is just a scratch of what the community offers. We have tons of tools and everything here that can make your job investing much easier. Click the link below, but we want serious long-term investors who want to get better. Click the link below, 7-day trial. It'll be one of the best decisions you ever made. And for those of you who hit a home run with Palantir, I commend you. But don't think that this thing means that you're a genius. It's just lucky. Thank you for your time.